Hi, everyone. My name is David Kosmeter. I'm the creator of TimingResearch.com. This is the Crowd Forecast News, episode 163 for December 4th, 2017. Today we will be talking about the 219th weekly report, which you should be seeing on your screen right now while I'm talking. If you haven't had a chance to download this yet, you can go to TimingResearch.com and get the PDF there. If you are watching live, I have the live chat area open, so if you have any questions or comments during the show, you can post them there. And I have Hanna back to moderate today, so I'm going to go ahead and turn it over to him.
All right, thanks, David. Great to be back. We got another, looks like an interesting group here today, and before we get started on talking in detail about the report, I wanted to just kind of go around and let people introduce themselves and tell us a little bit about themselves and their trading background. So if it's all right, I'll just go down the list I have on my sheet here in order, so I don't take notes in the wrong order. So Steve, you're top on the sheet. Steve Lentz from OptionView. Could you tell us a little about yourself, your trading, and OptionView?
Certainly. I'm Steve Lentz with OptionView Systems. Our educational arm is called Discover Options. I've been with the company since 1998, and OptionView has been in business since 1983, primarily involved in high-end options analytics. Back around 2000, we got involved with managing money. I ran a CTA there. Then we got into education. Discover Options fired up about 10 years ago, and we primarily focus on the one-on-one mentoring experience, helping beginning intermediate traders get up to an advanced level where they can sell premium in a market neutral delta neutral fashion, but also helping those that are speculating on direction certainly enhance their probabilities that way. And we also have an advisory now, a VXX trading system advisory that trades the VXX and the XIV and swinging in and out of those to exchange traded notes. So that's what we do.
All right, interesting, Steve. I trade a fair amount of VXX and XIV myself, so we will be able to talk about that a little bit during the call.
Sure.
Larry, how about you? Larry, we have Larry Gaines from Power Cycle Trading. Would you be able to give us a little bit of info on Power Cycle Trading and yourself?
Yeah, thanks a lot. Again, thanks for having me here today. And yeah, so I have an educational trading website called PowerCycleTrading.com, and we specialize in directional trading using options, for risk control and the leverage that it offers. And I've been actively trading for over 30 years and started out my career trading cargoes of crude oil and ran a large international trading group for over 10 years that traded lots of oil and all the other commodities. So kind of a broad background in all the different markets. And we specialize, though, in directional trading using options, and that's at PowerCycleTrading.com.
Okay, interesting. So when you're talking about directional trading, you're looking for a stock to go up or down over the whatever term you're looking at, and then you're using options to gain leverage and control risk.
Yes, we're looking at kind of the shorter duration trades, swing trades, 1 day to 5-6 days or something like that, and then looking to for the market direction based on our indicators, and then using options to manage the trades for risk and leverage.
Okay, great. So, and do you use a number of different kinds of option strategies for that? Or
yeah, a lot of different ones. Mainly credit spreads, debit spreads, condors, butterflies, just a variation, just depending on the market environment. So,
okay,
so hedging and teaching a lot of different hedging strategies.
So you use different things based on if volatility is high or low or things like that.
Absolutely, what we're looking at in the market based on just the conditions of volatility, et cetera.
Okay, all right, great. Thanks for letting us know about yourself and for joining us today. Anka from TradeOutLoud.com. I know we've talked before, Anka, but I can't do you justice in the way that you could. So how about giving yourself a little intro?
All right, so good afternoon, everyone. My name is Anka Metcalf, and I have been a professional independent trader that is focused on equities and futures for the last, and I would say 15 years, getting closer to 15 years now. So what that means is that I have been trading on my own for that period of time. And prior to becoming a professional trader, I have 10 plus years in investment banking and experience accumulated in Europe. And I run a trading company. It's called TradeOutLoud.com. It is specialized in training individuals how to day trade and swing trade the equities and the futures markets. And I myself trade futures for the New York trading session open. So I specialize in trading the open until about 11 or 12 o'clock. And for the rest of the day, I swing trade. So I use for scanning. I use to trail my trades. So I take my time to watch the market. Also, I'm the designer of an institutional proprietary trading system. What I mean by that is that I took a model and I kind of redesigned it for the retail trader that is based on price support resistance with correlated with precise trigger times that are throughout the day. With specific price zones. And when I'm talking about price zones, I'm talking about for specific prices that I look at, and especially for the futures market, not necessarily for the equities market. I also take into consideration chart synchronicity and divergence when I take decisions based on my entries. A great example is this morning, as the E-mini Dow was running up and NASDAQ was pushing lower, and there's that rotation is still happening from a few days ago, from actually 4 days ago, that when it started, and it's still going on. So it's still in progress. So I'm going to be very careful about these areas here being tested. Also, they might set up though towards mid to, I would say, end of December, probably around window dressing time. So maybe we have time later to talk about that. So that's a little bit about myself, and thanks so much for having me here today.
Thanks, Anka. You mentioned that you do kind of day trading near the open, and then you'll swing trade after 11 o'clock or so. Is that often in the same securities? Do you look to have a day trade turn into a swing trade, or
in futures, I might have, not necessarily. I don't necessarily swing trade the indices. I'm more specialized in the 4 indices, the S&P, NASDAQ, Dow, and Russell. I don't necessarily take swing trades. I love to swing trade stocks, not necessarily indexes.
Okay. All right. Interesting. And I haven't introduced myself. So for those of you that don't know me, I'm Rob Hanna. I've traded since about the late 90s. I began trading full-time in 2001. And I started publishing my ideas around 2003 on TimingResearch.com. I had a column that ran twice a week. I did that for a few years, and then in 2008, I started a site called QuantifiableEdges.com. Quantifiable Edges is still running, and I do a daily newsletter for Quantifiable Edges. In 2012, I opened a site called Overnight Edges that no longer exists, but it joined with Scott Andrews' Master the Gap site and became InvestiQuant. So we still trade the same edges the same way that I did at Overnight Edges there. And that basically looks to make trades at the close of business and then exit at the next day's open. And it's a nice combination for people that day trade. They can put their money or some of their money to work overnight. So that was why it was a good fit with Scott's day trading work. So at InvestiQuant, I also have a swing newsletter there that I do based on our swing guides, which are 9 different systems, and we run analytics on them. And I'll talk more about that later when I get into some predictions. But that's my background. Mostly swing trading and overnight trading is what I do. I don't do much intraday trading myself. So let's Let's get into the market and talk a little bit about our predictions. What I'd like to do, if it's all right, is keep the answers real short to start, whether we're looking at an up or down week, and then we can get into more discussion on why. But if we can just have kind of a baseline, say I'm bullish or bearish for the week, that'll let us know where we're all coming from, and then we can expand from there. So I'll start, and then I'll go up the list in reverse direction. But I am, let me phrase the question as it was phrased on the report. Which direction you think the S&P 500 will move from this coming Monday's open to Friday's close? It got a head start with a gap up this morning, but I am bullish on the week. So I think it's going to be moving up from Monday's open to Friday's close. Anka, how about you? Are you on the bull side or the bear side for the swing term for this week?
I am on the bullish side.
Okay. Larry, how about you? Bullish or bearish?
I'm looking for it to move lower from this, where it is today into Friday.
Love it. We got some disagreement. Steve, how about you?
I'm bullish as well.
Okay. All right, so I'll go in reverse. Anka, I'll let you go first if you like. Why don't you tell us a little bit about what you're seeing now that's making you think that we may be going higher? And before you get into that, you can talk about what kind of confidence you have in your numbers. Are you seeing real strong evidence? Is it kind of mediocre, or where are you at with things, I guess?
Okay, although we can't make 100% predictions of where the market is going to go for sure, and nobody can do that. What I see in the charts right now is that there is a possibility for another leg up in the market, and that is because this is primarily a news-driven market, and every single dip was bought. And if you look on the monthly charts, I'm going to pull it real quick here. This is literally a climactic move to the upside. So there's nothing about it. Everybody that has been bearish and has been looking to short this rally has been on the wrong side of the trade, to say the least. And I think that we do have another target area, 2680. I don't know if it's going to do it this week. We did run some projections, and we do see the next target into the 2680 area.
Yeah, we're not all that far from there. After
we're not that far. And if you recall, I mean, I don't know. I was invited into to another show, and I think it was in October. And everybody was talking about the 2600 level, and we were just in sync. Everybody was in sync. Everybody was seeing 2600 into the end of the year. So this was very interesting. Everybody saw 2600 into the end of the year and not into the end of the week. And that was in October. So that was very, very interesting. And now we're talking about 2650 area. Actually, we made it to 65 today for a new all-time high. And my answer comes with a little uncertainty level. And so I'm not 100% bullish. And that is because we're seeing NASDAQ pull in quite a lot and not having a little bit of strength. We've seen Russell this morning having some issues with handling these highs that were set at 1562. And I'm talking about the RTY that I'm trading on a day-to-day basis. And I do think that overall they're all bullish. The major rotation happened in NASDAQ today. The major rotation happened in NASDAQ today, and it happened at 11 o'clock rotation. There was an hourly switch, and it's actually one of the most dynamic moves that I have seen in the indices right now. So NASDAQ seems to be pushing a little bit more. Russell is divergent, is still on the lows, and S&P is the most flatlined. So that tells me that you have one that is running higher, one that is running lower. You have this flat S&P. S&P might have more odds of continuing higher throughout this week.
Yeah, I've noticed that as well. We've got I have some echoing going on here. I don't know if anyone else hears it. Okay. But there's been a real rotation. And like you mentioned, it started last week in the NASDAQ. on the 29th. What was that? Wednesday, I think. There's a pretty big sell-off in the Nasdaq, and that didn't hit the S&P nearly as hard. The S&P has since recovered, and it was at it's at new highs right now. Whereas the Nasdaq is trading below the midpoint of its 10-day range. It's kind of in a pullback at this moment. So the rotation is interesting, and it's certainly something to note. So yeah, I completely agree with you there.
And especially last week when we saw Nasdaq was down 100 points, and we saw Dow. Dow was up 100 points and Nasdaq was down 100 points. So it was a huge divergence.
Yeah, it's crazy. Even now, I'm looking at my screen. Nasdaq's down 5. It's not down a lot, but the Dow's up 200.
Exactly.
So you don't see that very often.
No.
All right. Okay. Thanks, Anka. Larry, let's go to you. Give us the other side of things. Why are you looking at things to perhaps go lower this week?
Yeah, I just think, I mean, the overall market trends, when you look at all the different time frames, are definitely up. When you look at the monthly macro, when you look at the weekly, everything's really nice and strong to the upside. But I think that we're extended here, and I think the market's going to just, I'm not saying it's going to crash and burn, but it's just going to take a pause here, breathe a little bit, regain some energy, consolidate, and then, then it can push higher. So basically, also, if you look at seasonality, the tendency is to pull back a little bit of a seasonal pullback the first week or two in December, and then you get that surge into Christmas. So I'm looking for the seasonal effect here this week probably, and then you get usually a push into monthly option expiration. So if you just look at the market indexes here, if you can see my screen, let's see. So can you see my screen here that I'm sharing?
Yeah, I can.
Okay. So if you look at that, these are extreme ranges. These are just based on average true range ATR. So if you look at the S&P SPX, this is 3 ATR, so extreme, as far as the extended. And, hit that 2618 retracement, 2600 everybody's talking about. Same goes with the Russell, same goes with the Dow. So for me to chase it up here, I think that a lot of market technicians will see it's extended, and we'll just take a pause. I mean, and look at, specific, sectors within these, particular indexes. So, be more stock specific. If you look at the XLF here, which has really caused the big surge off the tax and everything else, you can see it's extremely overextended. So just based on that, I think the markets will see an extension like this and take a breather, and the markets will pull back some.
Yeah, and I think it'd probably be a healthy thing. As you mentioned, early December is a little weak with the seasonality, and then you get the strong seasonality in the second half of the month. December OpEx week's real good, and it continues right through into the first few days of the new year a lot of the time. But
that's exactly right. Yeah.
If we get a move higher here in the next week or two before you get to that strong seasonal, it may be kind of a front running thing where, hey, now the seasonal's not going to work quite as well. So I'm not in agreement with you about this week, but I wouldn't mind if it happened. So, but I'm looking at different reasons other than seasonal. But you definitely got some good points here that the seasonal is good and we are overextended.
Yeah. Okay. Sorry. Yeah.
Yeah. No. If you want to expand on anything, otherwise I'll jump over.
No, that's the main thing, and I think you're going to see a rotation probably back. The other thing to watch that I watch closely is kind of as a proxy, as I, like everybody else probably too, is watch the FANG stocks and Apple. So Apple's starting to stabilize a little bit, so that's good. You can see that the FANG stocks here, if you can see the screen, they've all gotten hit really hard, except for Amazon's holding in there. But you look at Google, it's kind of on the ropes. It's really down, hitting this 50 simple moving average. You can see that Netflix has been hit hard. Even Facebook, they've all been, rotated money out of it and into these other sectors. So with that, still under pressure, and with these other indexes so extended, I think they're going to want to probably more likely have a breather, pull back. And if we see FANG and Apple stabilize, you'll see that rotation, maybe some more back into technology. So that's the other thing I'm kind of looking at, and kind of seeing that rotation type of potential there.
Yeah, those FANG stocks sure have number one become popular, and number two really become market movers. You know, they're pushing. They own the Nasdaq basically, right? I mean, as far as wherever they go, that's where the Nasdaq's going. So if you get a pullback in them, the index is going down.
That's right.
Yeah. Actually, I think there was an announcement, and I'm not sure if it's official yet, but someone was looking at FANG futures, maybe coming out in January. And Tom McClellan did an interesting piece either last week or I think it was the week before last, that looked at performance of FANG versus like the NDX. And basically, it mirrored it, you know, because what we're saying, the FANG kind of rules the day. So they're really not creating a product that's going to behave very differently, most likely, than just playing the NASDAQ futures, right?
That's right.
All right, so let's thanks Larry. We'll get back to you with more in a little bit. Steve, how about you? You're looking at some upside this week. What's making you think we might go higher?
Yeah, I'll make two comments. I'm going to show screenshots for a later question, but comment on the direction and then the volatility. That's what we look at quite a bit here.
Okay.
So direction-wise, you look at Friday's pin bar, a bullish pin bar, which was exceeded today, and it's all in an uptrend. It's kind of a classic setup for at least very likely for Friday's close to be higher than today's open, in light of just that price action in the context of trend. And so that's why I would just be bullish for this week. I think it's kind of a classic setup. But now, one thing we do here is that we do, and I do a weekly presentation on a volatility study. And so when you look at the market condition from three perspectives as of Friday's close: price action and trend, and then the stochastic situation. The 15.3 is trending down, actually, in overbought territory. And then the market is in a long-term uptrend, of course. And then price action, you had Thursday was an upswing bar and Friday was a downswing bar. That combined, that market condition has occurred 155 times since Jan of 2000. Okay. And so when you look at those 155 incidences and analyze it, I could find very little directional bias, but what you do find is a bias towards just lower market volatility in general. The upside, one standard deviation moves 1, 2, and 3 weeks out. They don't get struck near as often as just the market baseline. And then the downside, one standard deviation moves to the downside. Those levels are not hit in the next 1, 2, and 3 weeks either. So there's historically, there's a likelihood that we'll see less market volatility up or down in general. So, and as market neutral premium sellers, that kind of information is very important to us. But unfortunately, I could find no directional bias in that study. So those are my comments.
Well, it's also important to you if you're looking to trade VXX and XIV like you do, right? So you're expecting a contraction in volatility that'll probably
well, I'm speaking of actual volatility of the index, not related to the VIX or the implied volatility of the options. That's for a discussion here I'll have when we go into the indicators and stuff.
Okay.
Yeah.
All right, thank you, Steve. I'll give a little bit of what I'm looking at, and I think I'll share my screen to do it. Okay. So this is from last night's Swing Navigator, which I published at InvestiQuant. And what this is this is just a screenshot of our swing edges. And generally, if things are showing up bullish, they get highlighted in green. If they're not showing up either way, and that's just across this top and across here. If they're not showing up, bullish or bearish, they'll be unhighlighted. If they were bearish, it would show up in red. In any case, I'm seeing a fair amount of green on the screen, looking out over the 3 and 5 day period. And then we also break things down by what we call our system ensembles. We look at acceleration systems, how fast is the market moving, and where's that move coming from, momentum, and then seasonality. And all of them right now, based on different measures, are net bullish. So I'm seeing a fair amount of bullish evidence. This is suggesting a 58% chance that the market. I'm sorry. If we look at, let me look at the 5 day. The 5 day is suggesting a 60.6% chance of a move higher over this week, and a profit factor of 1.66, which means outsized gains versus losses. You're expecting to make about 66% more than you would lose over the long run in trading with odds like this. So those are actually pretty strong odds, and that's one indicator that's pointing towards the upside for me, and that's one reason I'm looking to the long side. Another one, I do a fair amount of studies, and this is from the Quantifiable Edges letter. This is just a study I did over the weekend. It's one I've run a few times in the past, and it popped up again this weekend. But this looks at, one of the things when you're looking at overbought markets is a lot of times when it initially gets overbought, then you're expecting it to pull back a lot of the time. But when it gets extremely overbought, that sometimes will generate momentum where it'll keep going further, and that's what this study is showing a little bit. This is just looking at other times the S&P closed above its upper Bollinger Band for the 4th day in a row, and that's something that doesn't happen that often. This is going back to 1961, and this is only the 47th time it's happened, where it happened on Friday. But what was interesting to me is that it didn't suggest a pullback. It actually suggested a continuation over the next several days. And if you look out, I highlighted 8 days here. If you look out as many as 8 days, then there's, it's been higher 79% of the time, and the average gain has been about 0.9%. So that'd be a pretty good move up over the next several days. And the other interesting point I have here is that over 90% of the time, there was a higher close at some point in the next 5 days, and that could be today, and that might be the only higher close. But the S&P is up about 14 points as we speak. So those are just a couple things that I'm seeing that are suggesting to me, hey, we've got momentum strong enough that maybe it's going to continue to carry us through the week. And all right, my screen's off now, correct?
Yep, we're back. We're looking at you. We're looking at you.
As the moderator, I should be able to handle that, but I'm not always so good at it. All right, let's. I just want to kind of go back through and see if there's any wild cards you guys are looking at this week that maybe we should take into consideration. When I went through the timing research report, it struck me that one of the reasons that people were giving for their optimism this week was tax reform. That was listed several times. One of the reasons that people were giving for their pessimism this week was tax reform. So, and really none of us brought it up at all. Are there things that you're seeing or that you're concerned about this week, whether it's tax reform or whether it's some other numbers coming out or technical levels or fundamentals that maybe we need to be on the lookout for that could make things that could change our outlooks, I guess. Steve, I start with you. Is there anything particular you're concerned with as we go into this week?
I got to hand it to you guys with the shorter term trading. You guys get into the weeds on intermarket relationships. I am learning a lot just listening to you. I do quantifiable or quantification of the daily bars in the context of premium selling strategies, either bullish or from a market neutral perspective. And as I was discussing earlier, and I'll show in a little bit on the indicator discussion, I was showing quite a good edge for premium selling, whether it's through butterflies or if folks do the condors or that kind of thing on the SPX. I was showing an edge as of Friday's close. And but I don't really get into the the news and the fundamentals as much as the patterns and where the volatility, the implied volatility is relative to the likely volatility of the underlying market itself. So I wish I could contribute more to that discussion. I focus pretty much on price action. Yeah.
Well, yeah, a lot of the news stuff I think is a distraction. So focusing on what matters to you is pretty important, right? I mean, we don't want to. You got to focus on something. You can't be helter-skelter all over the place and expect to make money trading, I don't think.
Well, that's what I believe that, and you do have to have a laser focus on what it is you do exactly. And
right.
But I got it. I tip my hat to you guys that are, especially the intermarket relationships. That's fascinating stuff. I love listening to that. It's very interesting.
All right, thanks, Steve. Larry, anything you want to add about what might change your outlook this week, or what certain levels you're looking for, or news you're worried about, or anything like that?
Yeah, sure. Well, primarily I think a lot of the news is already now in the market. So we've got the tax reform. You had the Senate pass that. Now it's going to go to both parties to do it, but it looks like that'll get done. So that kind of is out of the market, that news, or whatever's in the market. You had OPEC last week, so that news is in the market. So you had the big, volatility up, down last week. And I think this week, barring something else that comes out of the blue, which we don't know about, but I think it'll be a little bit more calm week. But that being said, that's why I think that with the market's so extended, especially when you break it down to certain sectors that got all the money popping into it last week, from financials to some of the industrials, that I think this week will be where it's kind of cools off and churns a little bit and just gradually pulls back. So
it could be a buy the rumor, sell the news thing.
Yeah, kind of, maybe take a little profit on the news. And then if you are, a follower of seasonality, then, you might think that, okay, let's take a little profit. Let's take the book a little bit right now, and then come back in, the second week into December, going into monthly option expiration. So that's kind of the way, from a timing standpoint, I'm looking at it. Okay,
good. Good thoughts, Larry. Anka, how about you? Anything you're particularly concerned about or looking towards this upcoming week?
Not really in particular. And I have to agree with Steve, what he just said, by watching the charts. I think this is the most important thing, because the charts are literally going to tell us what we need to do. If you're seeing a stall in price, it means that there's a pending news. If you see something move, in either direction, there is probably news that is forcing it either higher or lower. So I think the most important thing is to get down to the chart, eliminate all the noise that is around, and just focus on what you need to do. Because remember, when we're trading, whether we're day trading or whether we're swing trading, it's not about capturing the exact bottoms and exact tops. It's about capturing a portion of that trend, and that's what we need to focus on to make money within that possible direction that we are that we see happening in that specific trade. There are a lot of things that are going on this week. I was just looking at the calendar, or I pulled up the calendar. There are a lot of things, like we do have the ADP non-farm employment change, and then on Friday again, we have the non-farm employment change. We do also have a lot of things that are happening with the BOC rate, and even tonight we do have the RBA rate statement. So there are a lot of things that may influence the markets overnight, but in reality, like in a day like today, you come into the market, and if you have scanned, let's say, because I usually use my Saturday mornings to scan for the market to look for potential trades. Everything was out the window once you had that big jump, and that was extremely forecasted. I mean, we knew that that was that was going to happen, but we had nothing to do. So there was not much to do in the gap that happened overnight in the futures market. So you come in the morning, you see the market is up 200 points. What do? I mean, there's literally nothing that can be done unless you have to wait for a pattern. I mean, you can't buy the Dow or the S&P when it's at all-time highs, right? So you need to wait for a pullback, or you need to wait for something. Are you going to short it? Not really, because what if something else is going to pop the market higher? Then you're going to get wiped out again. So I usually trade with the trend. Sometimes I take, because I'm a day trader as well, and take short scalp opportunities. But short, like I'm very careful and about shorting this market, even for quick scalps. I'm not even doing that. So I'm looking for the pullback, looking for the areas of resistance, and then moving higher. So I think the charts are going to tell us exactly what we need to do moving forward.
Yeah, you bring up a good point there with where we are with things too, and that you need patience
exactly, and discipline. Yeah, and forcing patience and discipline, and it's gonna be, and it is very hard for some traders, and especially if you're running, let's say, a chat room or a signal service or whatever. There are beginner traders, let's say, that join, and I do have friends that run chat rooms, and they have a constant rotation of subscribers because there are these new traders that are program hoppers coming in, and if you're not calling a trade within the next hour or two, they think that it's a waste of time for them to tune in and listen to what you have to say. But we all know that in trading, you are required to have a lot of patience and discipline when it comes to trading your capital, right? Capital preservation, in my opinion, comes first.
Yeah, without a doubt. You bring up a quite good point there about traders too. I mean, I remember when I first started quantifiable edges, 2008. I did a little bit of a survey to the newsletter subscribers, and I was asking, what would you like more to see? And a lot of those early subscribers were saying to me, more trade ideas. I want to see more trade ideas. And I felt like I needed to be giving them more trade ideas.
And you're forcing the trade.
Right. And then I'm like, you know what? It's bad idea. My methods aren't looking at them. So it takes a good amount of discipline. And if someone you're following is trying to just put trade ideas out there all the time, when there really isn't anything based on their methods to be trading, then that's really questionable.
I so agree.
And like you, I use a phrase sometimes, and you're describing it perfectly right now. We're in a market that's basically, it's too overbought to buy and it's too strong to short, right? So you just got to wait.
Absolutely.
So, all right. Well, that's you guys. I don't have anything really to add to this as far as things I'm looking at or worried about this particular week. So I think maybe we just jump into the question of the week, which is, what indicator influences your trading the most? Let's start with Larry this time. You haven't gotten to start at all.
Okay, great. Thank you. Yeah, so for me, technical trader, based on the main thing, one of the main things is, it's a combination of things, but a really big part of what I look at is momentum. Okay, because without, if you think about it, without momentum, you can't push price. So if you're in a downtrend, you don't have, and the momentum's solid to the downtrend, it'll keep going, and you're not going to get a reversal until you get that momentum to swing the other way. So very focused in on momentum, trying to measure momentum with various different indicators, and then that's kind of the foundation of everything. So if you look at, I can pull up, so for example here, here's one that we're looking at right now that we've got a trade set up on, and this is BIB, Biogen. So if you look here at this chart, here's a daily chart. So these are our indicators and momentum based. So this is what we call a volatility squeeze. So we've got this programmed in based on some rules that we put together, and it shows a period of consolidation, a period of coiling, and then we're looking for either break up or a breakdown, which then can be very powerful and very kind of quick. So which is perfect for swing trading because you don't have to stay in the trade too long. But
right.
So if you look at this, we have to then decide, okay, which way is it going to go, up or down? So we look at momentum to give us the indication. Right now, our momentum-based indicators are all showing positive. So there's a potential for this to push higher. We're also like to look at Fibonacci levels, and so it's right into that 382. So if Biogen can start pushing through this 322, then I'm looking for a push up here to around 332. So I'd say the one thing I look at is momentum and momentum flows.
Okay, interesting. Anka, what about you? What indicators do you influence your trading the most?
I use moving averages. I use the 20 simple moving average, the 50 and the 200 simple moving average, and one exponential moving average, and that is the 10 exponential moving average that I use for more of day trading standpoint. I obviously use Fibonacci's when I need to find out if there's more room to the upside when I am calculating my projected targets. And also when I'm looking for pullbacks, I'm looking for specific areas according to Fibonacci retracements. And that's pretty much it. I don't use a lot of indicators. To me, price action and price is the one that dictates the moves. Other than that, I'm not a big fan of any hyper sophisticated indicators. I think that price is the only one, and it works for me. It worked for me so far for so many years, and I don't see why I should stop now. And I think price is king, and it's not me that I can't take credit for that, for saying that, but I think this is the right thing to do. And actually look at price action and what price action is doing at each and every single level. So if you're a day trader, watch the minor time frames and see how the price is oscillating, trying to establish, try to pivot, try to form its ranges, and also higher time frame charts when you're looking at swing trades. So for day trades, I love pullbacks into the 20 MA. And especially onto the 5 and 15-minute charts. The 15-minute chart to be is a better chart because it's wiping out, it's just erasing all the whippiness from all those very, very small time frames. And when it comes to swing trades, I love to watch pullbacks into the 50 MA. I think these are very healthy pullbacks that are happening right now. I do have some stocks that are on my radar right now. For potential swing trades. So they're still they're on watch right now. So I'm not in any swing trade right now this week that I took. So I'm totally flat this week on swing trades. I do have some swing trades that I'm carrying from last week. But other than that, I think that, in my opinion, this is what works for me. And I think that as a trader, you need to find what works for you, or learn a method and take that method, customize it to what works for you and what you see in the chart. Let the chart speak to you and don't chase whatever's happening in the market. I had a lot of traders that were tweeting, a lot of traders that were emailing me saying, oh my gosh, what a huge rally in the overnight. Did you catch anything? No, I was sleeping. Okay. So yeah. So just because the market is moving in one direction or the other, when we had that pullback that happened on Friday, no, I wasn't in any trades then, and I didn't short it, and I didn't buy the dip. I was probably one of the very few, because all I hear is like, oh, I'm buying everything. No, I wasn't even buying the dip. Okay, I just woke up and then on Sunday I was just imagining, okay, how much is the Dow going to gap up? Okay, that's pretty much it. So I was waiting for the futures market to open at 6 o'clock to see how much the Dow is up and the S&P and etc. But that's pretty much it. In terms of indicators, these are the simple indicators that I use, and they work for me.
Okay, good. Thank you. Steve, how about you? What indicators do you look at that influence your trading the most?
Hey, Steve, you're muted.
Oh, hey there, Steve. Welcome back.
I unmuted.
Okay. There we go. So am I sharing? Do you see my screen now?
Yes, we do.
Yes, perfect. Okay, let me do this if I can. Nope, it's not responding to the full. There we go. I'll just leave it like this. So I use a simple 50-day moving average, but it's not in a necessarily for direction. Let me explain this. So we're trying to find market environments conducive to trading butterflies and condors, which in the advanced options trading world means that you really want the market to not move very far in either direction. And so what we've done is I've done studies where I can take a bar in the past and I compare the volatility implied or the movement implied by the options, the VIX. You take the movement implied by the option prices and you compare it to what actually happened. Okay, and so when you do that, I then paint each bar either blue or red. So if you go back, you can see in these, there are some periods here where the market really takes off to the upside, and it really would have been best not to get involved in those periods where the market blasted off like that in terms of selling option premium through condors or butterflies. And so we can go in the past and
because there was an expansion in implied volatility at that time.
Well, no, you're looking at a given bar.
Okay.
And you're asking, okay, what volatility or what movement is being implied by the option prices? And then you wait 21 bars and you go back and you see, well, did the market move that much? Okay. And if it moved more than that, we paint the bar red. In hindsight, we would not have wanted to have been involved in a condor butterfly when the bars turned out to have been red. On the other hand, in the bars that turned out to have been blue are the bars where the VIX was implying a much higher movement than what actually took place. And so when you chart the market like this, the question is, what indicator can you use where you're going to knock out some of these nasty red bars? Mm-hmm. And when you go back and do that, you could just throw on a 50-day simple moving average, and you're going to remove a sizable number of red bars. You're not going to get after all of them. And I use stochastics of 15.3 and to try and go after and go after those in a little bit to refine it. But the first thing I use, the most meaningful indicator, is just if you're going to do condors or butters in the SPX, just do it when the market's above a 50-day simple moving average, and avoid those strategies when it's beneath a 50-day simple moving average. And so I take that kind of a study and I refine it and I present on it once a week. It's on our week. I do it Sunday nights. I come out with it. Discover Options is the YouTube channel, and you can subscribe there and then get an alert. And if you're into premium selling through condors or butters, this is the a good presentation I think you'd be interested in. But that's the most meaningful indicator we use in the context of how we trade.
Yeah, it's interesting. I actually have been doing some research along similar lines lately, where I've been looking at overnight risk depending on where you are versus long-term moving averages. So what are the chances you're going to get a big gap the next day? And what I've found over and over is that you're much more likely to get a large gap when you're in a long-term downtrend, right? However you define it, whether it's 200-day, 50-day, 100-day moving average, whatever it is, you're more likely to see a big emotional move when you're in a downtrend than you're in an uptrend, right?
Yep.
So Yeah, I completely see what you're saying, and that's interesting the way you do it with the red and blue bars there, and you can, like you said it right there, you can see you knock out a bunch of the red ones just by throwing a 50-day on there.
Yeah, it's a lot of the folks doing butterflies and condors will do it in any market environment, and I've always had a love for technical analysis and price action, and it's been my quest for a few years now to try and apply technical analysis to those market neutral strategies. I think that's the best approach that I've seen.
Yeah, sounds reasonable to me. All right, so I guess I got to answer the question too. And I showed you one of the indicators I use. That's those are the swing edges data that's produced for when I publish the Swing Navigator. That helps me set my market bias. So if I know there's an a 60% chance of a move higher over the next several days, and it's showing a profit factor of I think it was 1.66 or something, and what we were looking at earlier. Anything over 1.3 gets me interested in the long side, and then if it gets below 0.8 or so, I'm starting to get interested in the short side of things. So that's one indicator I use a lot. Another indicator that I've used for years over at Quantifiable Edges, I do a lot of studies like the one I showed, where I'll look at, hey, this is kind of the current market setup, and what has that meant over the next 1, 2, 3, 4, 10, 20 days. And then I have an indicator I call my aggregator, and what that basically does, it takes all the studies I'm looking at that are currently active, and it aggregates them to say, all right, you've got 3 bullish studies and 1 bearish study, and the bullish ones are more powerful than the bearish one at this point, so we're looking at bullish expectations, and that's it's just a little tool I use to let me know bullish or bearish. And then there's also a little piece of it that looks at how has the market performed versus recent expectations. So are we relatively overbought or are we relatively oversold based on what we thought would happen? And that helps me determine whether we might be at an opportunity or not. So we're getting near the end here. Those are the 2 things I use a lot. Let me run back through the group, and I want to just give you all a chance to let us know if there's anything going on at your site that we should be aware of currently, any news you have there, and then if you have a trade idea for the upcoming week, then that'd be great. So let's go down the list again. Steve, start with you.
Sure. Let me come back here. Okay. Bring this up. All right. As I mentioned, there was a quantifiable edge for the premium sellers, condors and butterflies, as of Friday's close, and even now. I'm with OptionView Systems and Discover Options. You can go to our website, OptionView with the VUE, OptionView.com. Try out the software for free, and it's also we have DiscoverOptions.com, and also we have an advisory via xxtradingsystem.com. We've had outstanding reserves or returns since March 6th of 2016 that you can see there. But I certainly appreciate the opportunity to come on and discuss the markets, and I learn something every time I come here. So thanks for having me. Greatly appreciated.
All right, thanks, Steve. Larry, what about you? Anything you want to let us know about what's going on at Power Cycle Trading? I keep laughing when I look at the name. It reminds me of something you're not supposed to do if you're a baseball player, right?
Yeah, exactly. So, again, thanks for having me here. And so we've got a couple of things, or one thing coming up here to let you see. Here's my join us, powercycletrading.com. And if you click here for Larry's free webinar, I'm be doing a webinar this on, hopefully it's up here. Yep. Doing a webinar this Saturday on swing trading using options. So directional swing trading using options. So if you see this, come on over to the website, powercycletrading.com, click here, sign up, and join me this Saturday for a really great webinar on how to trade directionally using options, and I'll show you the strategies that we use, etc. Come join us there. And this is one trade you might take a look at. This could be a pretty volatile trade, Biogen, but it looks like potential to setting up for a possible break higher. So that's it. So again, thanks for having me.
All right, great. Thanks, Larry. Good getting to talk to you again. Anka, how about you? Anything you want to tell us about TradeOutLoud.com right now, and any potential trade ideas for this upcoming week?
Okay, great. Sure. We have an open house Tuesday and Wednesday. So that's tomorrow and Wednesday from 9 o'clock to 11 o'clock. If you're interested in day trading futures, or you want to take a glimpse into our method of trading, we don't, what we do is take between 1 and 4 trades per day. Obviously, if we would have hosted the trading room open house today, obviously, I don't know if we would have had a lot of trades going on right now with everything that's going on. But I hope everybody that is interested, you can visit our social media sites. It's not on our website, but you can visit our social media, whether it is Twitter or Facebook /TradeOutLoud, and you can sign up for this open house. And also, I do have 2 trading ideas that I would like to share. And one is Lumber Liquidator, and we've had a consolidation. I hope everybody can see the charts. It is just triggering above this resistance area, and we have a profit target on this trade into the $32 area. So it has a good risk reward right here. Any pullback on this may be viable into the $29. I actually bought it today at $29. It's only trading at $29.18. It's actually trying to erase this pivot high right here, so it's ready to go into the open with the first target into $30.75 and the next target into $32. I also have 2 very good examples because we've been talking about the 50 MA, and one of the examples is MU. Micron, that is literally was on my watch list when I scanned this weekend, and I'm still watching it with a possible buy over $42.75. If we should have a rotation back into that point, this is what I would be interested in. So MU on my bullish list is again, and Lumber Liquidator, which is an active trade, and again on any pullback into the $29 is the buy. Thanks so much for having me here today.
Thanks, Anka. Just for me, again, you can find me at investaquant.com, and I do the Swing Navigator newsletter there. I also host the Overnight Edges trading room, and you can get a free trial of the Navigator anytime. Just go to investaquant.com and quantifiableedges.com also. You can check out my work there, and again, there's a free trial available at Quantifiable Edges if you want to check out our gold package. As far as trade ideas, one stock I am looking at that's not there yet, but if it closes down a bit more today or tomorrow, I could be looking to get into Qualcomm, which is it had a good run, and it's having a sharp pullback now. So that's one to keep your eye on. It may very well set up for a bounce in the coming days if it pulls back a little bit more. And that's it from here. I think I finished 1 minute and 20 seconds early today, David. That's got to be a record.
Yeah.
Thanks for having me.
Thanks, Rob. Thanks, everyone. Great show. So just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us tomorrow night, December 5th at 9 p.m. Eastern Time for Analyze Your Trade, episode number 14. I'm gonna have Todd Mitchell, Jim Kenny, Jody Samuels, and Dean Jenkins on, and they will be talking about trade ideas submitted by the audience. Just want to thank all my guests again for this week. Steve Lentz of OptionView.com, Larry Gaines of PowerCycleTrading.com, Anka Metcalf of TradeOutLoud.com, and Rob Hanna of InvestaQuant.com. Thanks, everyone.
Thanks again, David.
Thanks so much.